guess I was smart enough, right, to see the recession coming, or was right in the middle of it, and said, okay, maybe buying real estate is not the right time to be doing that. Was smart enough to go, okay, these taxing things, there's probably going to be more of those. Maybe I'll dive into that space and started buying taxings in Montana and Wyoming.
Hey there, I am Dr. Jason Balara, and this is the Know Your Why podcast, where we explore the why behind success. Every week, I meet with real estate investors, veterinary entrepreneurs, mindset coaches, authors, and fitness professionals to uncover their why and how it drives them on the winding road to success. What is your why?
Hi, everyone. I'm Jason Balara, and this is the Know Your Why podcast. Today, I'm here with Brian Seidensticker. Brian's an aerospace engineer by trade. He made the leap into real estate in 2006 and discovered the world of tax sales investing. So I know that's what we're going to talk a lot about, Brian, today, and I want to give you the chance to tell the audience your story, your background. But first, thank you for coming on the show. Thanks for taking the time today. I really, really appreciate it. And as I mentioned, this will be the first time we've talked about this particular lane of investing on the podcast. So really cool. I'm excited. I think people will get have a lot of interest in this. So thanks for being here today.
Yeah, thanks for having me. I'm excited to hopefully educate some new folks on what the space is all about.
Yeah, I'm sure that you will. So please, let's just start with your background and tell us a bit about yourselves and kind of what got you here. Aerospace engineer is no small feat. So it'll be really interesting to hear kind of the how that all ties together.
Yes, I get asked regularly of like, why the heck did I leave what I was doing to do what I do now? And it's definitely for good reason and wouldn't change anything. But like you said, I was trained, I guess went to school as an aerospace engineer, was lucky enough to get a job, a dream job, quite frankly, in the missile defense sector, doing what sounds like, and it was really cool stuff, working on missile defense, projects, targets and interceptors and all the stuff you read about in the news. And we, but I guess the downside of it is I found myself realizing about the red tape and really 2 years of what I call banging my head against the wall for 2 minutes of cool is about what it came out to. And I guess the epiphany I had was I went on vacation. This is one of the beauties of being in corporate America that I do miss on occasion, but when you actually go on vacation, you can completely unplug, right? There's somebody that has your job while you're gone, or at least keeping things up. And I was gone for 6 weeks, which is a pretty significant time. And I was pretty nervous about being gone that long and what I would come back to. And oddly came back to, it was almost like I'd never left. And that's really where I realized, wow, I am not accomplishing something on a daily basis. And I feel like I'm doing a lot on a daily basis, but if I can be gone 6 weeks and really come back to no change, then I'm really like a hamster on a wheel. And that's really when I decided I need to find something else. And so I had started looking at real estate, but that was the first time that I said, you know what, I think I need to change careers. And I did both for a while. And so real estate was kind of a side hustle. I did the fix and flip thing for a couple of years, and then actually got into a property a little over our skis. Nice, I guess, good thing is I wasn't doing so many that it was detrimental. Ended up, signing it back, etc. But in that process, we had a couple properties we were doing in Montana. In that process, I actually had a bunch of notices sent. And the unique thing about Montana's tax sale process is every potential investor that might buy the lien on your house sends you a letter, right? Most states, it's the county sends you one, or maybe 2 or 3. But the fact that I was flooded with 20 or 30 of these letters from different companies, right, was what made me go, what is this all about? And made me investigate this whole tax lien investment thing and realize, wow, there's a whole space of buying tax liens out there. Maybe I should do that. I guess I was smart enough, right, to see the recession coming, or was right in the middle of it, and said, okay, maybe buying real estate is not the right time to be doing that. was smart enough to go, okay, these tax lien things, there's probably going to be more of those. Maybe I'll dive into that space, and started buying tax liens in Montana and Wyoming. I had no idea that it was the peak of tax liens as far as quantity in recent history, I think, ever. I don't know if it'll ever get back to that. And had I known then what I know now, I'd probably be a lot further in a lot of things. But that it is what it is. And, hindsight's always 2020. But we were buying tax liens in Montana and Wyoming, which are, from a return standpoint, quite honestly, two of the worst. They're not horrible, but there's a lot of states that are a lot better. And simple things didn't exist. And simple things like go online and find a resource of when and where these auctions are occurring, what are the list of the parcels going up for auction, and then the last thing was like, okay, what's all the property information? All I wanted to do was figure out which of these things that I wanted to buy, and those simple answers just didn't exist. And so we started compiling that really as an in-house platform. I jokingly, at least I didn't know of OneDrive or Google Drive or Dropbox. Maybe those were out there. I wasn't aware of them. As an engineer, I guess I knew how to build a simple website, and that's what I did. I had one employee who happens to still be with me. She's my sister, Rachel. She was in Montana. I was in Arizona, still working, and built a website really just to share information back and forth, so she could do research. Right, I could look at it in the evenings. We didn't have to be emailing files back and forth. And that website I was showing a gentleman at a conference about a year later, and he is the one who actually suggested, you know what, you should make this public. It's not readily known out there. You might be able to charge for it and at least cover some of your overhead. And did that. And in 2010, formed what is now officially Tax Sale Resources. And within a year and a half, the income from that platform way outweighed what I was making. I mean, I'd say I was buying liens as a fund. It really wasn't. It was a few $100,000. It wasn't generating enough income to really support me. But within a year and a half, it was like, wow, this could be a legitimate business. And still didn't give up my day job. I was still trying to figure this out, and it wasn't until really 2013 that I said, okay, maybe I need to actually look at this, as my job, right? And so I talked to the company I was working for. We decided that it was basically on a transition plan, and so we ended or parted ways on very good terms. But I did that because I wasn't sure if things were going to work out, if I was going to have to be back begging for a job, in 6 months. And so I knew enough to know, like, you can't just, here's my 2 weeks, I'm gone. It was like, hey, I need to transition this stuff. It was over a multi-month period because you never know what was going to happen. Right. And that's really where a transition and growth legitimately started happening. And that's, anyway, long story short, that's my journey into the tax sale space. Yeah,
It's really interesting. I mean, I guess it's interesting how you came across it, where it was, something that you were basically affected by. Am I understanding that correctly? You had a tax lien against you?
On the wrong end of the tax lien, essentially, or potentially on the wrong end of the tax. Never actually got sold through that. But I also realize now it didn't. But if I were in almost any other state where the county send the notice, I probably would have thought about twice about it. I already gotten the delinquent tax notices. I'd gotten those from the county. The fact that I got so many from different investment groups is what made me go, what is this all about? So it's funny how those little things come together.
Yeah. It's in the funny. So I mentioned we haven't really talked about this topic on the podcast, and frankly, I wouldn't know anything about it at all, except I coincidentally I can't remember exactly what this was. I saw something like, hey, come to this free event about investing in real estate, and went to the event. It was like at a hotel, some like random hotel at night. And it was actually about tax lien. And so I never actually got into it. I never invested in any tax liens, but I learned a little bit about it. So I know a very, very little, but I want you to can you kind of describe the process? And I do know it is different in each state a little bit, but can you kind of describe what this means for people listening so they understand kind of what we're talking about?
Are you planning a remodel or construction project? Overwhelmed by the process? Over budget? Extended timelines? Strained relationships? We are all too familiar. At Lark Construction Services, we help homeowners and business owners take control of their construction journey, from reviewing bids and contracts to catching red flags before they become costly mistakes. Our Clarity Audit is a one-on-one expert review of your plans, estimates, or current progress, giving you the peace of mind and a defined action plan to move forward with confidence. Don't let confusion lead to costly errors. Visit larkconstruction.com and schedule your free call today. Lark Construction Services, saving you time, money, and stress.
Yeah, I call tax sales because it's really two large buckets. There's tax liens and tax deeds, and then there's kind of this middle ground called redeemable deeds. And most folks that are listening that have never heard of this are going, "What is this guy talking about?" So maybe I'll describe a little bit, Jason, of how the heck the mechanism works, and then it probably will make more sense for everybody. But I think it really comes back to there's two guarantees in life that nobody likes, right? One is death, and the other one is taxes, right? Yeah. And for people to pay their taxes, nobody wants to. So in order to enforce it, there has to be some sort of enforcement mechanism. Like, what happens if you don't pay your property taxes? And that's what the whole thing is all about, right? So if a property owner doesn't pay their property taxes, right, the county or the municipality, right, again, it varies by state, but they're on the end going, if it's a significant enough amount, they're not able to pay teachers, they're not able to pave the roads, pay firemen, pay the police. Like, there's a lot of facilities in some metro areas, that's significant, $50 to $100 million or more that they're short. And so they're looking for ways of balancing their budget. And so how tax liens, right, this is the lien side of it, came about was they said, oh, look, I will put a lien on the property that didn't pay the property taxes, right? And then investor, if you buy that lien from me for what is due, so if there's $1,000 in taxes, give me that $1,000, I'll give you that lien, and then whatever penalty or interest that the homeowner will pay when they eventually pay, right? So if you're late, you have to pay the $1,000 plus some, right? I'll give you that plus some, right? And that plus some amount is what varies, state to state, or how that's calculated. And so that's how a tax lien works, right? Is I compare it to a micro mortgage, right? A micro mortgage is a mortgage or a lien on your property, right? And the right to enforce that can go through a foreclosure if you don't pay it. And the tax sale process is similar. So with a tax lien, you don't own the property, right? And you don't have any rights to the property. What you have is a interest in the property if the property owner never pays, I'll say ever, right? And that again varies by state. Now, what typically happens with a mortgage, right, is a month or two if you don't pay your mortgage, right, the mortgage company immediately starts the foreclosure process, right? And that can result in the resale of your house. That's what happens with mortgage delinquency. With tax sale delinquency, it's a much longer timeline, right? In most states, it's a minimum of 6 months. Most states, it's 1 to 2 years. And there are some states where it can be 5 years of delinquency before there's any further action done other than you get a lien on your house for whatever those unpaid taxes are. Most people pay their property taxes, right? There's 2 or 3% of property in aggregate nationwide that go delinquent. And of those, about 98% of them pay their taxes back at some point during that delinquency period. So there's a very small percentage, right, that end up not paying their property taxes. So what happens then, right? Again, back to the mortgage comparison. If you don't pay your mortgage, the mortgage holder starts a foreclosure action. The lien holder, the tax lien holder, similarly, right, if you don't pay your property taxes for multiple years after that initial lien, then they can start a foreclosure action, right? That foreclosure action is sometimes done by the courts, sometimes it's done by the county. It again varies by the state, but at the end of that foreclosure action is the sale of the property, right? And it's usually conducted by the county, whether it's the sheriff or the treasurer, et cetera. That is selling the actual deed to the property, and that's what we call a tax deed. And so tax deed holders are very different, right? You are buying the property. You do have rights to the property versus the lien is you just have an interest in the property, and that's the difference, right? Also very different in, liens or whatever the tax amount was, say $1,000 on average, right? Deeds are usually a percentage of market value. You're talking for that same house, $60,000, $70,000, right? Now, the third term that I threw out there was this redeemable deed, and there are some states that kind of a weird middle ground of you buy the deed at the auction, but the deed has a redemption period where the previous owner can come back and pay the amount that they're due, and those are what we call redeemable deeds. They're just a weird the combination of a lien and a deed, and so that's what we gave it that term. So, does that help as far as what this is all about, Jason?
Yeah, no, that's a great description. And I mean, like I said, I probably know just enough to confuse people, but it is very, what I did notice and learn when I was looking at it was like, it is very different per state. And like there's certain, the certain, like you said, the tax lien versus the tax deed. And there's some states where you could actually end up owning the property if it gets to that point. But I would, and tell me if you disagree, but I would think that most of the time, the main goal in this like realm of investing is to be getting the interest and penalties that go along with purchasing that lien. Essentially, it's like you sort of equated it to a mortgage or a micro mortgage. That's I think makes the most sense. It's almost like you're lending the city or county the money for that taxes, and that interest penalty is kind of coming to you, over time. Is that a correct statement?
Yes, I think there's two very different. There's groups that go in between the two, but there's very different mentalities between buying tax liens and buying tax deeds, right? The tax lien investors are exactly as you said, right? It's more of a passive investment. You're buying the lien, you're earning an interest, you're getting paid back at some point. Downside is you don't know exactly when. Could be tomorrow, it could be 2 years down the road, right? And you don't get that interest until that. So it's not like a monthly payment that you're receiving. You don't get that interest until that lien is paid off, right? Versus tax deeds, right? And those investors, they're just real estate investors, right? At the end of the day, tax deeds is just another mechanism of buying real estate with all the different ways you can buy them out there. Tax deeds is just another way that local real estate buyers are buying properties at what they feel is a decent discount. And that's really the two, right? And there's not very many that do both.
Yeah, that makes sense. So you started this website with your sister, and then like developed it into a business. So tell me a little about you said initially it was a way for you to communicate with each other and kind of share data. What is it? What is that service now? I'm guessing you said I think other people can sign up and use it. And how does that work?
Yeah. So Taxa Resources, initially, right, we're doing, again, simple things, right? Calling counties, figuring out when is their next auction. That was one. And then usually a follow-up to figure out, can I get the list of the parcel numbers, right? And that's just kind of a second piece of information. And then that usually that list, at least in the past, rarely had anything more than the parcel number. And so it was like, okay, what does that tell me? Not much. So then you had to go figure out what were those parcels? Are they vacant land? Are they single family homes? Are they commercial properties? All of that can be included in a tax lien auction. And so those were the answers that we're finding, and that's what we were making available. And so today we have a whole team that does that and gathers that information. And then also, in 2010 we were essentially selling a list of, here's the auction list, and then if you want to buy a data file, it was a separate Excel data file that you could buy. I think that was how we were delivering it. Today, all of that data is a central database. It's all standardized. It's got a nice visual layer on top of that. I think Zillow, but for tax sale properties only, where you can go in and move around the map. You can click the properties. You can see all the details of that property and really filter stuff down. And so in a large list, right? Cook County, Illinois is usually one of the largest auctions. They might have 60,000 parcels. You can filter those 60,000 parcels down to like the 50 that you're actually interested in based on your criteria. And that's what Taxa Resources, the platform, does. Now, in 2015, we launched, with a partner, we launched a platform that does the portfolio management of those, right? And what I like to tell people is, if you're buying liens on a smaller scale, right? I say up to 500, managing those and each county has a slightly different equation for calculating what interest is due. You can do that on a small scale in Excel, right? It gets really complicated with some of these. There's some really large funds out there that are buying, $50, $100 million a year in tax liens. And you're talking tens of thousands of liens across hundreds of counties in multiple states. That trying to do that in Excel is an absolute nightmare. And so we were actually approached by a fund to build a portfolio management software platform, and that's what we did. And so we offer that as well. And so, investors of scale, my guess is most of the folks listening wouldn't be needing that software today. But if you do get in the space, you buy enough liens, then looking at a platform to help you is great. It's also one of the I think 2 or 3 platforms out there that are certified by banks. And so if you're going to use actual bank financing, then they prefer to use a platform like ours, so they have insight into what's going on. It also allows other users, so you have multiple people on your team. So it does a lot, right? It's hard to describe it all. And it's one of those tools, like there's probably more bells and whistles than 80% of folks will ever use, but those few folks that need those bells and whistles, it's got all that as well.
That's fascinating. Great resources to have. And I mean, it's funny that you say if you have a small number of liens and say 500, I got really kind of shallow into this topic, but the idea of getting 500 of them to me sounds like a lot, but I guess in a lot of instances, they're not that big, right? So if someone wants to actually have substantial passive income, you do have to go out and get, a large number of liens. I would guess, large scale commercial properties, those payouts are going to be a bit bigger than, your single family residences, and also depends on the state and the interest amount. I remember Texas specifically because I was living in Texas at the time, and it was like 25%. I was like, that's actually a pretty good return on their liens. But some states that might have been the highest, if I remember correctly, or close to it. But Texas also has very high property taxes, so it's kind of just really, really variable, even down to the county level, I would imagine. Or is it?
Yes, very, very, very variable, right? Depending on the same house, let's say the same $200,000 house in one state, that might be $1,200 in taxes. In another state, that might be $6,000 in taxes. But yeah, you're exactly right. Like 500 liens is a lot, right? It's, that's on average, that's usually between $500,000 and $1 million. Most, smaller scale investors aren't going to buy that much. And that's kind of the point, right? If you're going to do this yourself at a smaller scale using Excel, I don't try to tout that the tool for the price. It's just not worth it. It doesn't really solve a whole lot of your headache for the price that you would pay. Now, but if you're an institutional level, that headache is a whole lot bigger. Then that tool makes a whole lot more sense.
Yeah, and so does the platform allow you to track? I'm assuming sort of everything. Like if some of these might, if you have the opportunity to foreclose, it's going to kind of track and tell you, okay, look here, these are up for possible foreclosure, and kind of keep everything, I guess, moving forward into whatever pathway you need it to.
Correct. Yeah, it's an automatic calculator. So it's got all those equations built in. It's a document storage. It's a to-do reminder. It's a pretty elaborate portfolio management platform. Exactly.
No, that's awesome. It is really a fascinating space. It seems pretty low risk to invest in tax sales. What would you say? What would you say the risks are? What would you say? Where would people might come across pitfalls in getting into that space?
Yeah, I would say the risk is low if done correctly, right? Especially on the lien side. The trick is doing it correctly. And so what I mean by that is, the county has their list of parcels that they're looking to sell. It's not their fault. They don't do anything to say like, this is worth something, this isn't. And how counties have broken up their parcels over the years, you always end up with these weird shapes or places, right? I've seen a parcel that's literally a mailbox or a stretch of sidewalk or a partial of a road, right? These things that don't really make sense. And so if you're not doing your research and you buy a lien and you haven't figured out, yeah, you bought a lien, but when it comes to anybody ever paying taxes on it or actually enforcing it, meaning, just to start a foreclosure, you're never going to get anything back. And so you can quickly waste money, right? If you don't do your research. Now, if you do your research correctly, buying liens is fairly, low risk because, you're buying them at, let's say, 1 to 5% of the value of the property. So even if the property has a fire, like that's a worst case scenario, but happens, or gets damaged, etc., and the value drops, right? You're still well covered by the value that's left if you ever have to go through an enforcement action. Now on the deed side, right, tax deeds, you're buying, you're not into it for 1, 2, 3, 5% of properties. You're into it for 50, 60, 70, 80. I mean, Southern Florida, it's crazy, like over 100% of the value of the home for whatever reason. And so if something happens on that side, which there's a whole lot more what ifs, right? Squatters, come in and wreck it, right? Somebody pulls the copper out, right? These are usually pretty rough shape. Then, that is a much higher risk than buying the lien. So it just depends. And on top of that, right, on the deed side, there's asset risk and there's asset underwriting. And then there's the other part of underwriting most people don't understand, which is title underwriting, because you're not getting title insurance from the county when you buy these things, right? It might come with a bunch of garbage, right? Unpaid code violations. It might come with a mortgage that wasn't noticed correctly that you got to figure out, right? So people typically understand how to underwrite the asset, right? What is that property worth on the market? They don't typically understand the title end of it, which I guess we can get into here shortly, but that's why banks won't finance the purchase of tax deeds at auction. And that's why we created a fund, Mount Earth Capital, to partner with folks to give them the liquidity to purchase properties at auction. Otherwise, it's a very cash intensive investment. So that's just a little background on the risk. I always get nervous about telling people it's zero risk or no risk or low risk, right? You just got to understand what you're doing, to not fall in those potholes and get burned.
Yeah, I mean, and thank you for explaining that, because I don't think there's a such thing as no risk, but it's maybe a little bit harder without the experience of someone like yourself, like a little bit harder to maybe understand those risks. You mentioned the title issues. With that in mind, do you help people? Like, is how you've built these platforms, but how might someone learn more about it, like a mentorship type of situation? How might someone learn how to get into this space and also have someone help them avoid some of those things you just mentioned?
Well, the one thing we're not, I'll just throw this out there, we're not a mentor, we're not a coach, we don't have a class to take. Now, there's a ton of free resources on our website, and I have a podcast, and I will interview attorneys in different states, really getting into very nitty-gritty stuff. And so I think the answer would be, if you're someone listening and you're very self-motivated and want to learn yourself, then I'm obviously biased, Jason, but I think if you go onto our blog and you listen to all of those podcasts and watch all those interviews, you will receive more comprehensive information than any other coach or mentor out there, right? The one thing that we don't do is just ask us a question, be on call, we're not holding hands. And there are a lot of great coaches and mentors out there. There's some not so great ones too, and so I would say if you're looking for that, then be on the lookout for terms like you just mentioned: no risk, government guaranteed, right? You can own properties for pennies on the dollar. Although those things aren't necessarily fully untrue, that's not the right mentality of a coach I think you want to look for. So look for those that are, and some of them are spendy, don't get me wrong, but the good ones will at least get you educate in the right way so you don't get burned by some of those ways that I mentioned earlier.
Yeah, I can't remember the exact timing of when I actually kind of looked at this stuff, but I'm going to say I don't think that tax sale resources was a thing then, or wasn't a thing that I came across, I guess it would be, but it was really hard to figure out like what you were even looking at. Like here, you could at that time, almost none of the counties had these tax sales online. It was like you had to call someone and get a list mailed to you, and then you had to try to figure out like what that parcel was and all of this, which is what I'm gathering kind of that's what you and your team do to make that like easier for people. You said, sort of navigate it like a Zillow type of platform. I mean, that would be so much more, that sounds so much more helpful than what I was kind of faced with when I was trying to look at it, where it was like, it was daunting because I was like, well, I barely ever came across something that even looked remotely appealing. And I was looking at it from the standpoint of a real estate investor. Like I was like, oh, what are my chances of getting to own this property? And so I was looking at it that way, maybe looking at it more of a, I just truly want to collect, kind of on those liens is the less confusing option. But I'm quite certain there's, a lot more resources and technology, your site being one of them, that people could use now to get, if they want to get into that game, they could.
Yeah, you're right. I mean, one, I say positive, I feel bad saying that a little bit, but one positive that came out of COVID from an online, access standpoint is prior to COVID is really Florida and maybe a handful of other counties nationwide that had sales online. And what COVID forced counties to do is, because back to hey, they need to balance their budget. They got to pay teachers, et cetera. The quantity of counties that went online because of COVID, now it's more like 70% of counties are online. Now the trick still is, right, is we compile information for about 9,000 auctions a year, 1.5 to 2 million properties are in there. And it's all in one standard format. So I can say, hey, in the state of Texas, give me these types of properties, right? Or hey, in these 5 states, give me these types of properties. Or in, hey, nationwide, I want to know which bowling alleys are going up for sale next week, versus those other platforms, it's county by county, right? It's great information. You can get all those answers, but you're going to go look at Miami-Dade County, Florida, and then you're going to go look at Palm Beach County, Florida, and then you're going to look at all of those different counties one by one versus looking at an aggregate. That's probably the biggest difference, and the fact that we don't have 70%, we do have I like to say 100%. There's probably some sales out there that we miss, but yeah, we've let's say solved that problem of figuring out which ones are worth buying.
Yeah, that's I mean, like I said, it was very interesting, and it was but when I got right into it, I think we were living in Houston. I'm pretty sure I went to an auction just to kind of see what that experience was like. But it's like, yeah, you're on the the steps of City Hall, and people are calling out parcel numbers and I'm like, I don't know what we're talking about here. Like I had no idea what people were bidding on. It would have, so I kind of stopped looking into it. But it is I think with a resource like tax sales resource, that's got to make the process a whole lot easier. The other thing, Brian, I was wondering about, you mentioned that sort of, 2010 timeframe was maybe the most tax sales that you had seen. Tell me a little bit about that, like the numbers that you've seen, throughout the time frame of doing this. Is it, if that was the highest, I'm assuming kind of went down, but what are you seeing now in today's market? There's obviously some challenges in the real estate market now too. So what have you seen from your perspective?
Yeah. So, in the last several years, it's been fairly flat. The last few years, a little bit of an increase. And, there was a COVID blip because there was actually a year where some didn't have a sale. And so it looked like a big increase, playing catch up. But in general, the last several years, it's between $8 and $9 billion sold between tax liens and tax deeds on an annual basis. Compare that to 11, 12 is over double that. And so that type of growth had a significant impact on increased supply. Right, demand didn't change a whole lot at that time. And so, it was kind of the heyday, for tax lien investors. There's a ton of secondary market portfolios trading, right? There's just a very large gluttony of tax liens that were out there. And then that has, subsided. And now I'd say supply is much less than demand. And so it's a tough market out there for trying to buy tax liens at scale, right? And trying to earn any spread, as they call it, right? They're trying to borrow capital the cheapest and make the most rate, and so the landscape has changed significantly. And that quantity of properties, it's there's about 1.5 million tax liens sold annually, quantity, about 200 to 300,000 tax deeds sold annually. So volume wise, I think that's a pretty good estimate for where it probably will stay for a while.
Yeah. Well, obviously, if that volume goes up substantially, that's bad news for the economy. So it's a bigger implication.
Exactly.
Really, really fascinating and kind of great explanations of how this all works. Let me switch gears, Brian. I want to ask you the question. I mean, every guest I ask, the name of the show is Know Your Why. I always like to ask people, what is your why? Kind of what's your driver? Like I said, this is the first time we've talked about this, and I do find it really fascinating. But also, you come from aerospace engineer background, so sort of what excites you, what keeps you going? What is your why at this point?
I think I'll answer that kind of two ways. One, personally, I guess, and then maybe from a company standpoint. Personal, my why, I want to have a sense of purpose that I'm making some sort of positive impact on the world. And what I was lacking in the aerospace, position that I was in was that sense of purpose, right? It was a cool job. I just didn't feel like I was making any sort of like progress or an impact on anything on a daily basis. I was just, trying to figure out red tape. And so for me, that's what, it's like versus the tax sales space, I'm accomplishing something, learning immensely on a daily basis, right? I go home every day feeling extremely satisfied that I've accomplished something for the day. Now at a corporate level, like what is our why? We got in this space and eventually figured out our why is kind of a backwards thing, but like what did we want to accomplish? And we look at it as I don't know, this is probably not the greatest analogy, but we're kind of like the ants of the space, right? There is ants, what do they do? Nobody likes them, right? But they clean up the forest floor. They are very key to the ecosystem of a forest, right? Or of any ecosystem they're in, right? And that's kind of what tax sales and like our purpose is. Like when you go down a street and you see a tax sale property, it is obvious. It's usually overgrown, the biggest eyesore. It's bringing down values of the whole neighborhood. And the folks that take on the challenge of taking that property and making it into the nicest house on the street, not only are they accomplishing something, but usually the neighbors in the neighborhood love them, right? And so we look at it as improving communities. And so our goal and our why is like everything we do is to improve the communities. And so all of the tools, solutions, right, is, yes, it's got to be profitable because in our opinion, it's got to be profitable to be sustainable. But it's also has to be improving the communities, and so having like our capital program, right, which is like, hey, there's successful tax deed folks out there doing that, right? They're buying those eyesores, they're fixing them up, but most of them only have so much capital, and so there was a lot of stuff that was being ignored too long, and then eventually you got to tear it down, and so we came up with the program of like, how do we enable those investors to do what they're doing on a larger scale so those properties don't end up in a tear down scenario. And initially was working with a bank to do that. The bank said, sorry, we don't understand the title side of it. SEC says they didn't tell us if it's a real estate or a real estate security, we're out. And so that's, we one door closed, another window open, and we said, okay, maybe we start a fund to solve that problem. But it's all with the purpose of trying to solve that or improve the communities and take care of those forgotten properties that are out there.
No, that's very cool. And I mean, that's a good point too. And that was something that when I was looking, it's like, you if you can find a picture of whatever this property is, it's it's not like a nice, it's not a nice home and like well cared for. Those homes are getting their property taxes paid. So it's a similar, I think like a similar view of neighborhoods and housing the same way that you would from a wholesaler or a flipper or something, where you're looking for those homes that have been neglected and looking for a way to kind of turn them around. And that would be more towards the tax deed side of things versus like where tax lien, you're most of the time unlikely to end up owning that property.
Correct. Yeah. And we can go down that hole, but there used to be the advent of buying the lien and potentially owning that property for those back taxes. But there was a Supreme Court case the last few years that has plugged that hole. They basically said that that avenue is not constitutional. It's a taking, by the county of value and that. So the states that had that potential have a tax deed foreclosure process that results in a tax deed auction where somebody's actually buying the property and not buying the lien and then converting that into a deed like some of those states used to.
Gotcha. Okay. Oh, I didn't know that. That's good to know. Well, I mean, like I said, super interesting, Brian. I appreciate you being on the show and kind of sharing this with us. It was always fascinating to me when I looked at it before, and your I understand it substantially better now from your explanation. I'm going to check out the website, but for folks listening, how can they connect with you? Where would you like us to send them?
Well, I guess the easiest way is if you just go to taxsaleresources.com. There's a phone number on there. That phone number actually, the people answering the phone are real people. It's not an AI answering service. Yeah. And so once you get a hold of one of our customer service folks, just say, hey, I saw Brian on Jason's podcast. I'd like to talk to him more, and they'll get you in touch with me.
Okay, perfect. We'll put that in the show notes so people can find you. Well, again, thank you for coming on the show today. Thanks for sharing all this. I really do. It's fascinating. And one of my favorite things about real estate in general and doing this podcast is just there's so many different avenues to be an investor, be involved, and you're another great example of that. A path that we haven't talked about a lot, but a really successful path nonetheless. So thanks here for being here, and thanks for sharing everything.
Absolutely. Thanks for having me, Jason.
Yeah, absolutely. Folks, make sure you connect with Brian. Please like, rate, and review the show so we can continue to get great guests. And as always, thank you very much for listening.
Hey there, I am Dr. Jason Balara, and this is the Know Your Why podcast, where we explore the why behind success. Every week, I meet with real estate investors, veterinary entrepreneurs, mindset coaches, authors, and fitness professionals to uncover their why and how it drives them on the winding road to success. What is your why?